Yeah. All right. So yeah, this is just for recording sake, just to go over trade recap week ending 2/16, just touching on some things before we move into the actual recap. So as Sal was saying before, about, a lot of us have made a lot of money. I'm just gonna say caution because again, as I was saying, and from my experience, as those wins, a lot of those wins stack up, um, you can get confident, but you can also get cocky, where you kind of get this untouchable aura about you, like you're unstoppable. You know what I mean? Like everything that you're going to get into is going to work. And there's nothing wrong with being confident. Just make sure that you don't get cocky because the market will humble you, keeping it a complete transparent stack. That is exactly how I began to blow up my account, right? That was the first move. Then came the revenge trading. But the starter of all of that is literally that last quarter, December heading into January, everything. No, I'm sorry. That first quarter, January heading into, I think it was about mid-February, bullish as hell. Everything was running. And then boom, February hit, that's all she wrote. Then came the revenge trading or whatever. So that eventually led to the entire blowing of the account. And again, that's because of the cockiness that kicked in. I started taking shortcuts, stopped charting as much, stopped having the same consistent process with every single ticker that I'm charting out. I would, think I was good enough to just look at something within like 2 minutes and okay, it's gonna run. Go ahead, jump in, and also not practicing proper risk management. So again, just speaking from experience, I'm not going to say that this is going to happen to you guys, but I do want to caution that, right? Because I don't want y'all to run into the same roadblock or obstacle, if you will, because that one definitely like knocked me out for like a good 2 week depression for a little bit. Had to pull myself back together after that one, but yeah, just wanted to caution that. All right, so with that being said, we're gonna do a trade recap. Like I said, coin Tesla Lily on the map. I can add two more because I don't want this thing to turn into like a 3 hour. I gotta consider the video sizing so I could just upload it straight in. But essentially, what I'm gonna do is, I pulled, a couple different tickers that were mentioned in the group. I'm gonna trade it as if it were me, right? I'm gonna look at it as if it were me. Doesn't mean that I'm doing it, and I'm saying that to say I'm not gonna do it the same way the admin that called it out did it, because not all of these are my call outs, right? So um, I'm showing you one way doesn't mean it's the right way. There's many ways to skin a cat, so just be aware of that. But kind of showing you like how I would break it down, what I would look for, kind of given my process in the trade recap. Maybe it'll help you. Hopefully it helps. Hopefully you get a couple aha moments. If you don't, then I apologize. Maybe it all then at that point. So all right, let's go ahead and get started. So first thing that we're going to start with, I'm going to go ahead and share my screen. Is SPY. Just joking. No, not SPY. So I'm going to go ahead and go back to coin real quick. All right. So clear this out. Let's go back to here. Okay. So this is what coin would have looked like, right, on the week. Because I'm going to start off on the week. Normally, I would start off on the month and kind of draw the broad informations on that. But again, in the interest of time, I'm going to go ahead and start off on the weekly time frame. If there are any questions, go ahead and put them in the chat. That's absolutely fine. Or you can take yourself off of mute and you can ask your questions. That is absolutely fine. There is no dumb questions. I know we have some beginners in here as well too. So please don't be shy. You're not going to get ridiculed. This is not like a beginner teaching class, but yeah, don't be shy to ask your question. All right. So first thing that I would do is, kind of establish my range by looking at by drawing out the broadening formation. So the first broadening formation that I see is, oops, my bad, is down here, right? This three uh, originally took out this low over here. So there's your expansion right there. The low was taken out, lows were swept, and then we made a lower low. So therefore you have the bottom of your broadening formation. Now, there can be more than one broadening formation. I know some of y'all know that, but again, that's for the beginner's sake. For example, we have a low and then we have a lower low here. Let me expand so you can see, right? A low and then we have a lower low. So that is a broadening formation where you draw from a lower low back to a previous low. All right. And then also for the top side of it, you have a high back to a previous high, right? So let me get rid of this one so there's no, like, just for lack of confusion. There we go. So this is your range, right? Again, multiple broadening formations can be drawn, but you've established your range. And right now, with the range established, we are coming from the lower part of the range. How do we know this? One, because we can see it, the exhaustion from the downside. And then also, if we were to draw fibs, we would still be underneath the equilibrium, which is the 50%. Let me make sure that I am not lying to you. And I'm not. Okay. So, did somebody try to say something? Oh, I don't know. I guess I'm hearing things. My bad, y'all. Right. So that's the first thing that I would do. I'm actually going to do it without the cheat of the let me get, yeah, without the Strat Teach V2. Now, a lot of y'all DM me asking me when I go through the videos, what is the indicators that I have on my screen? I'm going to tell you, but I'm going to recommend the way that I learned, which was I kind of started doing it first without the indicators, right? So exactly what I'm doing now, drawing out the broadening formation, right? Then afterwards, what you're going to do is you're going to look at, you would draw out your entries. So this is going to be my weekly entry. And then draw out your weekly put entry, right? Then the next thing you want to do is, at least for the weekly, I usually draw at least one target for the weekly, right? Just in case, if we get a nice little run up. So the weekly target up at the top to the call side is 161.38 on the week. To the downside is going to be, oh, I forgot to code it, sorry, is 112.18, right? So weekly entry, 114.51. Weekly put target is going to be 112.18. If we go to the call side, weekly entry would be 144.55 and then 161.38. Now, why do I do it for the weekly? Because by nature, I am a swing trader. So I am usually choosing targets that are at the very minimum 2 weeks out. More than likely, it's going to be a month out, right? Obviously, depending on the market, because if the market's shaky, I may drop down into just 2 weeks out and keep it at that. But I'm drawing out the weekly target because if I decide to do something a month long, then I'm more than likely not looking to target a daily target. I'll still mark them out, but I want to know what my weekly target will be. If I'm going a month long, I want to know what that weekly target could be because I've given it enough time to get to that point. Obviously, there's, ATR and everything that you have to consider, but I know Coin has a pretty high ATR. So it could move, $20, $25 in a month. It's possible for it to do that. Okay. Again, any questions for any newbies or actually anybody that comes through, please don't hesitate to ask. All right. So I've got my weekly done. Next, I would go through some hybrid timeframes, but again, for the interest of the video and also kind of keeping it a little simplistic for anybody that's, just coming into learning this, we're going to go straight to the daily. All right. So I'm sorry, somebody trying to take themselves off mute? Okay. So on the daily, remember I have it rewound back to the previous week, right? So if I'm ready to trade coin, first thing that I noticed on the coin on the weekly is that we went outside bullish, right? So what do we know about the three candle? The three candle is an outside candle. It is a reversal candle. And then more importantly, what does it signify? It signifies aggression, whether it be to the buy side or to the sell side. In this case, for this week, it signals buy side aggression, right? It started out as a two down, right? It broke the low of this candle, and then we went ahead and pushed back up. And also a three is a broadening formation on a smaller time frame. So more than likely, it is probably this, probably that. Let's move in on to the daily. And there you go, right? So the three is a broadening formation. Why? Because it expanded to the low and to the high side. So it expanded from the previous range. So when you zoom in on the daily, that's what it looks like. That's that expansion. I mean, obviously it would probably be more there, but you get the point. Since I drew it on the weekly, that's how it showed up, right? So threes are very, in my opinion, they're probably the most important because from there you can get either a continuation, consolidation, but if it stays above the 50 of that outside bar, then it's more than likely going to continue heading up. Vice versa if it's coming to the sell side. But either way, what did we end up with? We ended up with a on the week we went outside, and then also on the daily we ended with a two up. Now this is a bearish candle, and I know people are looking at that. Well, it ended up bearish. However, a couple of things that wouldn't scare me away from that. One, it's a two up, right? It gapped up, came back down to try to close that gap, couldn't do it, right? Couldn't get back to it, right? So if anything, it used previous resistance as support. It gapped up over that resistance. If you see, let me make that white and a little bit clearer, and then just thicken it up just a little bit, and then I'll label it. Right? And so again, that we've been talking about what was once previous resistance, and you can see it even goes back here. So this was a pretty strong level for coin, finding some issues, since back in January, since about mid-January, right? So what was once previous resistance now can become support. And that's exactly what happened here. We came back, touched that same previous line of resistance. Now it's supporting that, and then the bulls are pushing off of that. Now, just couldn't flip it back to green. But again, I'm just stating my reasons for why I would not be afraid of this particular candle. It also really, because of the gap up, it really also could just be profit taking as well too. So you have to think about that. Let me stop for a second. Let me see. We didn't know that. I don't know what we're talking about. What we, oh, wow. I don't know which one. I mean, I'm glad you learned something, but I don't know which part you're talking about. But if you need me to repeat anything, let me know. Okay. Um, so yeah, it bounced off of that. So I wouldn't be scared of this candle. And then again, you have to, as a strat trader, you have to trade what you see. What is it that you're seeing? You're seeing a two up candle. Yes, it may be bearish, but it's also exhausted from the downside, bouncing off of previous resistance. So that gives us a good chance that price is going to continue up. This also could again just be profit taking, and also it didn't close the gap. So what I would be thinking on the next candle, now that I've marked, actually, let me finish marking out my daily entry. Daily entry would be down here. I don't mark out, if the weekly entry and the daily entry are the same, I don't like put another white line. That just doesn't make any sense. So I just leave it, the way that it is. However, I will mark out my next target. So my next target, actually, are they the same? Oh, no, just a little bit lower. So my next target on the daily, if we were to take the day up, my next target on the daily would be 161.04. Okay. On the daily, my target to the downside would be 125.81. Now I'm going to get into something that's not necessarily strat related, but I feel like it's happened a lot, so I feel I got to say something about it, right? What you may want to do with gaps is you may want to draw your fibs and only showing the 50% in between the gap, because if price drops down, this could be like basically breaking through this resistance or coming back to test the resistance. It could drop down, excuse me, and do something like that, right? And then bounce off of that and then continue going higher, right? The 50% of the gap fill. So that's something that you could also look out for and just be aware of. I'm not saying your whole entire trade should be based on that, but I'm giving you extra tools, if you will, to your game plan. If let's say you're bullish on this, right? Let's say you have a bullish bias on coin, but it drops, let's say on Monday, right? Because you know Mondays are about indecision, but it doesn't completely fill the gap. So it's good to draw this 50, because even if it does sink below it, but then comes back and pushes through, then you know the bulls are probably going to continue taking this higher. Just probably either A, needed to close the gap or come back to some level of some level of support where the buyers can step in and start, you know, taking this back up, as well as the shorts maybe start profit taking as well too. All right, let me pause for a second. Oh, 3 bar being a broad new format. Yeah, 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 absolutely. It definitely is. Do I think that we can hit the 217 gap before halving? I don't know. I haven't looked at Bitcoin today. I do know that Rose was right about that 53,000 area being a little bit of resistance. Um, where is the 217 gap? 217 gap. 210 to, oh, this one from here to here, or is it like a gap on a different time frame, I guess? But yeah, so far that's the only gap that I see. Could it hit that before? Let me see, 161's here. So if we, I mean, yeah, you gotta. I mean, this is a PMG setup to the upside, right? So technically speaking, yes, all these targets need to be taken out, but that's an ICT concept. You need to be aware of this high over here, because that could be potential resistance. So 206.84. Yeah, I don't know. I don't know, because it depends on how much it runs. If it hits that gap fill, it may hit the gap fill and then bounce right back out of it before gathering orders and then moving back up. But I don't even know when the halving is, to be honest with you. I just know like that this is an area that you definitely want to pay attention to right here. 205, because looking in the past, one, two, three times, knocked and failed. So might be a pretty strong area of resistance for it. So that's just something that I want to be aware of. Hopefully that answers your question. All right, so back to on the daily, right? Again, my weekly entry is the same thing as my daily entry, so I'm not really gonna do anything about that. Also, another thing is when you have a really large candle, um, I wouldn't expect price to immediately take that out. So again, what are some areas that it can, find some resistance along the way? That's where I draw the 50 of that particular candle as well too. When you have a really large candle like that, um, you know, as well. So uh yeah, so once I'm done, and I basically again I do this from the month to the week to the daily. I kind of stop there, and then again I'll look at how price is shaping up on the 65, But that's essentially what I'll do as a swing trader. Actually, I'm sorry. I'll do the quarter, the month, the week, and the daily as a swing trader. Because sometimes my trades can take longer than 3 months as well too. So just putting that out there. But now that we got everything marked out, we have a bias established, right? Um, where are we in the range? We're coming from the bottom of the range. Not obviously not the bottom. That's why I say we're coming from the bottom of the range, right? What is the week looking like? The week went outside, and even though that's not necessarily an actionable signal, it kind of alerts us to the buyer aggression that we talked about before. Again, 3 candles equal aggression, whether it be to the buy side or to the sell side. Okay. So when we get threes like that, we are normally looking for the 2 up continuation. However, that doesn't always happen. Sometimes it can end up consolidating because, you know, you kind of have to think about it like a boxer in rounds. So the 3 bar would have been round 5, where the boxer's throwing all the punches in the world. And then round 6 is where the boxer's just consolidating and being more defensive, kind of like a rope-a-dope that Muhammad Ali did, right? Being a little bit more defensive, not swinging out as much until what's his name gets tired, and then boom, that's all she wrote, right? So actually, that would be a Nirvana because he kind of did the rope a dope first, and then came out with the 3. So that would probably be a Nirvana. So what Muhammad Ali did but in reverse, right? So this time he started out swinging hardcore in the first couple of rounds, and then he
Man, I
roped
ain't
it up the
lying.
rest of the way.
Hey, that's one of my favorite people of all time, bro. And I draw inspiration from that boy, man.
No,
That
I,
motherfucker
I
be like, the
definitely, yeah,
stage is set.
I
Man,
definitely,
that
I definitely
motherfucker,
hold him in high regard because
that
when
motherfucker mentally whoop your ass.
right, it's not even just that. If you think about not to get off topic, but I am going to say this about Muhammad Ali. If you think about the era that he grew up in, and then having to be forced to, go to the Vietnam War as well too, and
Yeah.
stand in his ground, like that takes a lot, and to be willing, like seriously, to work your ass off all your life to become a boxer and to become the heavyweight champion of the world, and to be willing to give that up to stand on business. I mean, yeah,
Yeah. Um,
that's huge.
Ali got one of the best stories ever, dog. That motherfucker is a true warrior, bro.
Yeah, he
Um,
definitely mentally
Sonny
is
Liston, that Sonny Liston fight, George Foreman, everybody was fucking scared of George Foreman, bro. And just his training he went through to fight him, and his training
yeah,
in general, and just his mental makeup and shit, bro.
yeah. All right, so with coin, the next steps are, let's see how it plays out, right? If we, as a stratter, what do we know? We have a game plan. We'll have to have a game plan for both sides, right? So if I'm still bullish and it drops down, I'm looking for price to come back down to 135.11, somewhere around there to potentially bounce. If it bounces, then good strong indicator that we're probably going to continue pushing up. All right. If it breaks through that and then comes down to take out the next target, right? So it broke your put entry. Let's say you got into puts at 137.17. Let me erase this previous resistance so y'all can see what I'm talking about. Put entries at 137.17. So if that triggers, then we can probably look at, based on this ATR, we can look at, if you want to play it super safe, the 135 put. We can look at the 130 put. Again, based on this ATR, it can definitely move $7, right? Especially if we're going 2 weeks out, so we can look at that. Or if you're feeling froggy, like you really think this is going to really drop and you have a strong drop your nuts conviction, then yeah, we're looking at 125 put. That's to the downside. Game plan to the upside is, if we're long and it comes back to 135 and bounces, we may not enter on Monday, but we definitely ready for something to pop off on Tuesday, right? We get a lower entry and then we move. Or if it immediately takes the daily and the weekly entry up, right? Then we know that the day and the week are currently in bullish time frame continuity. Most likely the month is as well too, and probably the quarter. Most of y'all will have a full time frame continuity indicator on there, so I'm not really gonna like show it right now. Let me see
I
chart.
got that joint. I got that range going up to 210. That's the range of it. Not saying it's gonna go there though.
Right. Now,
With
keep in
those
mind, this is this
with
is
those
this is this is bar
this is
rewind.
with those Oh, all right, all right, all
Yeah,
right.
yeah, it's
My bad.
bar rewind. I haven't. I'm literally recapping what we would have done or should have done. Well, not should, excuse me. What we would have done on Sunday before the market opened up this week. So, let's go ahead and I'm gonna slow it down just a point
I'm
five. So,
um I'm gonna look him up, Cass.
okay. Oh, you talking about what Cass put in? So,
Yeah.
boom, right? First week. I mean, first day. This is Monday, right? Monday. We take daily entry, right? So you would have entered, we took the daily and the weekly entry. So you would have entered at 144.55. My bad, I didn't say what contracts I would have taken to the call side. Contracts I would have taken to the call side is if we're talking 2 weeks out, if it were me personally, I would have grabbed either the 155 or the 160. Why? Because I am targeting up here. I'm not targeting the 50. I'm aware of the 50, but I'm not targeting the 50 because for me, I have conviction in coin. I feel one, it's coming from the lows. I know Bitcoin was doing something at the time because I read something, I read the news. I had also charted Bitcoin. Again, these are things that you should be doing, right? If you have a ticker that you're looking at, you should also chart its sector. All right. So if we're doing coin, what's the number one factor that helps coin to run? Bitcoin. So if Bitcoin is running, more than likely coin, Mara, Riot, and what's that one? MicroStrategy. I always want to say MicroStar because of its ticker MSTR, but MicroStrategy. Those four on and what was Hut, I think, yeah, Hut. Those five are probably running. Okay. So little game. If you don't know about sympathy plays, little game here, little gems. Take out your pen and pencils, please write that down. All right. Now, why am I also targeting 160? Because lots of resistance in that area. So I feel like this is going to be a magnet for price to get back to after it dropped below. It's going to be a magnet for price to get back to either to break above it and make a higher high, therefore broaden in formation, or it may tap it and come back down. But what do we know so far? The first day we entered the 144, and we know we're up. We know we're up, right? So we went, this is a two up continuation. All right. What happens the next day? All right, good. I'm glad that we had that drop. Let me erase some of this so we can talk through this trade for a second. Okay. So we have our daily entry here. Now, let's talk about stop losses, right? Because I know that question has come up as well too. What would you use as your stop loss? Now, for a strategy, most strategists that I know and that I see in Twitter and that I've personally talked to, do a stop loss one of two different ways, right? And I'm talking about pure strategies if you're following the strategy purely. If they enter the call, then down here, this now becomes their stop loss, the low of the candle. Okay. If it were to go puts, then the call side would turn into your stop loss. So now that your call has triggered, this now becomes your stop loss. That's the first way. The second way, and you probably want to use it more so if you're trading the strat on smaller time frames, your entry is now your exit, right? So for example, on Monday, right, we started low, but we triggered to the upside. On Tuesday, we fell back below. So technically, if you're using your entry as your exit, you would have exited. Honestly, you would have exited when price opened on Tuesday, back at 140. I'm not going to tell you which one is better than the other. Me personally, as a swing trader, I have time, um, and I'm just keeping it a stack. Sometimes I'll put my stop loss at, and again, that's not a strat rule, but depending on how much time I give it, sometimes I'll put my stop loss down at the first put price target as opposed to where the low of the candle was. Again, not saying you have to do that. I'm
Yeah.
just
If you don't have that risk tolerance and you can't
right.
stomach that, do not do that.
That's what I was about to say, right? I'm just showing you things that I have done. Doesn't mean you have to follow exactly what I'm doing, but just giving you kind of like a cafeteria. You got all the different stations with all the different foods or whatever, and then you pick and choose what you want. Okay. So On Tuesday, we come down at 137.17, right? Now, for me, we're up, we're down. I give myself time, right? One, we have a bullish candle. Two, I'm still aware of this, the 50%. 50% hasn't been invalidated yet for me. So I'm still in this trade. Again, because I've given it time, right? And I'm okay with that. I've given it time. I'm okay with that. And I think actually this was what, CPI, right? So on a CPI day, we did have the drop that happened, but then coin started pushing back up. All right, so what happens next? Right? So I wasn't scared by this two down candle. And yes, it got very close or just tipped. Which one? I don't know which one's I think this one is a lower one. Yeah, 137.17 is a lower one. Hold up. Let's see. No, no, no. Okay, okay. Okay, so then it's that one. So it just dipped 4 cents below. I'm keeping it a stack. That wouldn't scare me. That I would have been okay with that. What happened? Give me a few minutes. Oh, okay, yeah, yeah, so that's cool, no problem. If anybody else has questions, please don't hesitate, right? So what do? We gapped up, okay? So I know a couple of things. I had CPI happen. That's the reason for the drop. So when you're swinging, you kind of have to think about things like that. When the ticker drops, you have to analyze one, besides it just hitting your stop loss, did it drop because of something the company did? Example, was there bad news about the company? Did the CEO say something stupid? Did did something happen to Bitcoin? Right? If the answer to those are no, and I know it's mainly because of what happened in the market as far as CPI, then I'm probably, and again, it just barely tapped my stop loss and I have time. I'm probably gonna let it ride and see what happens. Just keeping it a stack. All right. Again, if you don't have the patience for that type of risk tolerance, that's fine. You can always exit and then you can come back in at a later point whenever it gives you a better entry. However, my target is already hit by Wednesday because I stayed in, right? So if I had gotten the 160 calls by Wednesday, Wednesday's close, I'm here already, right? So this was a winning trade already on Monday, but it didn't hit my target yet, so I stayed in. It dropped back. I'm probably, if I'm not mentally tough at this point, I'm probably freaking out. And then on Wednesday, what do? Runs right back up, right? So then what happens? So at this point, if I have, since it hit my target, if I have multiple contracts, I want to probably take some money off the table, secure a bag, maybe leave maybe one or two runners or three, depending on how many contracts you bought. But coin's pretty expensive, so you probably got maybe one or two at the most. If you have time, can you go over BA? Triple inside is killing me. Nope, I mean, I'll go over it, but that's your mental. That's your mental killing you. I mean, not trying to blame you, but you're probably getting a little anxious. If you are, it's probably impatience. I would say leave it alone for a little bit, right? Triple insides consolidation, that means nobody's made a decision. So what I would probably do, Doc, is set alerts on the weekly, depending on how far out you're trying to trade it. If you're trying to trade it like a swing trade, then yes, set some alerts on the weekly so that when they get triggered on the daily, then you can come back to it and it'll let you know. But if you keep watching that thing, it's gonna make you freak out. Like I know I'm in puts right now for BA. I really haven't watched it though because I had a feeling like I'm well prepared. I know that there's potential that we stay inside. What I'm really hoping for, just giving you a little insight on my thought process with BA, is I'm hoping it to catch it both ways, right? I want BA to drop below 200, take the gap fill first, the one that takes it down to 197-ish, 198, somewhere around there, right? Takes it down there. And then I want to see a reversal and I want to catch that back on the 200 call with time, 200 or 205 with time. And I want to catch the long the other way. When what happens, calls and puts not clean enough, not enough data to What are we? I'm sorry, Cass. Are you talking about coin or are we talking about the BA that I just talked about? Oh, the triple inside. No, no, the best thing to do with triple inside, it's honestly, I know we're so used to things moving and triggering. It's to wait. To me, when I see inside on any time frame, daily, weekly, monthly, or quarter, I'm actually no, monthly not so much, quarter not so much either. But um the weekly and the daily especially, if I see it's consolidating, that tells me wait, right. And just keeping, I know this is very cliche to say, but um I've been trading going, well shit, we're almost at 4 years. um I've found that the trades that I've let come to me and speak to me, I put that in quotation marks, those trades have probably ended up being my best trades. And I don't mean like large ass percentages. I just mean like it was for lack of a better word, easy. Like it flowed. You know what I'm saying? You're not biting your nails through the process. It's just calmly doing what it was supposed to do, following your game plan as if you told it to do that shit, even though we know that's not the case. But those to me are some of the best trades. Um, because when you think about your game plan and you really think about, okay, it can hit here and do this, it could do that, it could do that. So if it does this, I'm going to do that. And literally, it's honestly like watching the creation of a symphony. Yeah, seeing all the notes just come together and it just makes this amazingly beautiful music. At least that's how it is in my head, right? So anyway, um, right. And honestly, that statement right there, the law of attraction statement, honestly, that applies to everything in life, like anything, really, relationships, friendships, hell, even situationships, job life, industry you want to work in. Like if there's like a force to it, like I'm not saying it won't work, but it probably wasn't. It's like you're forcing it to work for you. It probably wasn't. um I don't want to touch on anybody that's not religious, but I can't think of a better word. It's probably not divine. It's not divinely sent to you for acceptance. I hope that doesn't really touch on anybody who's not religious. All right. Shelly, thank you. I'm really not a poet, but I appreciate that. That is such a compliment because I feel like I'm the least creative guy on this earth. I really do. Yeah, but thank you. I really take that as a compliment. All right, back to coin because we still got to talk about Tesla and we still got to talk about Lily. By the way, shout out to the Lily holders on Friday, yo. Wasn't in it, but still just as happy because I saw it. Y'all was killing it. Okay, love it. Okay, so yeah, here mind frame. What are we at mind frame wise on coin Wednesday? We're in the trade. Let's say we took the 160s. It hit the target. Okay, so now we're kind of in the driver's seat as far as what, like, we have options now, right? We're not making options. Excuse me. We're not making decisions based on emotions, right? We can choose to still drop nuts because we have faith that price is going to get up here. There we go. That price is going to get up to there at 175.57. But again, really long candle. So what I probably want to do if I'm a stratter is I want to draw the 50% retrace, just kind of see where price might be able to bounce off of, maybe before, moving up the next leg, TTO into the upside. So at this point, I think for me, when I was in this trade, I took profits, but I did re-enter again at the 162.5 call, right? So I got the 160s when it hit my target. I took profits. Then I waited a little bit, and I grabbed. Yeah, it was on Wednesday that I did grab the 162, if I'm not mistaken, because earnings was on that Thursday after market close. So I grabbed the 162.5. But again, you could have held, right? You could have held your runners and let them go. So let's see what happens next. All right. So on Thursday, we get a red day. However, again, this is where I got to stress to you, make sure you see it for what it is, right? We have a red candle, but is it a two down red candle? No, it is a two up red candle. So all that happened more than likely, again, we don't know the full truth. We're not gurus or whatever, but more than likely what happened is that we had profit taking. We ran up, profit taking, we closed below the candles open. But more importantly, this is why I drew the 50%, right? Because where did price come back to after exhausting, right? It exhausted below the 50%, tried to close the gap, right? But again, what was once resistance can now be support, right? So price pushed back up. Oh, let me stop. Let me see. No. So I'm purposely not talking ICT concepts. So I'm not talking about fair value gaps whatsoever. So if I was just using pure strat, all I would have done is I would have drawn the 50% of this big red candle, not of the fair value gap. However, I there in me personally this week, I did use ICT concepts towards this trade as well too. But I'm trying to teach it just from the strat perspective. All right. Okay, so we come back. We exhausted. We came back above the 50% of the candles. So for me, that's not a reason to get out of the trade, especially if I left runners, right? Because with runners, you have to think about it like this. We've already secured the bag. No matter what happens with those runners, even if those runners go to zero, the entire trade is still profitable, right? That's the way you have to think. You secured enough of a bag, right? That even if those runners go to zero, you're still good. And with that, that leaves you stress free, right? So you can take your profits whenever, stress free. You don't have to bite in. Oh my God, no, this runner has to go too. No, not at all. What's the significance of the 50% of the large candle? Ah, okay. So it's really what is the significance of the 50% retrace. So shout out to the OG Sarah Strat Sniper. What she noticed over time while doing her charting is she noticed that she applied it to when you have candles that could potentially turn into an outside candle. Because again, an outside candle has to start off as a two up or a two down first before it becomes a three because it's reversing to the other side. What she found is that sometimes price, like for example, in this case, if price is going to continue up, right? Let's say price was moving in this direction, it would need to get past the 50% of this large candle. One, because there's a lot of selling volume right here that happened on this candle, right? So if we're going to get above that 50%, we need to push above it and hold above it in order for us to continue with the bullish sentiment, right? That's not always a rule, but just something that she has found that happens more often than not. If it hits the 50% and then does this, we're probably going to pull back and go bearish. Or if it hits the 50, if it hits the 50% and just keeps going, then again, that continues our bullish bias, our bullish sentiment. In this case, it did this, it pushed up above it and then came back and just hovered right above it for now. Uh, yeah, that's there we go. Ah, Jesus. There we go. Right. So now we see, actually, first off, does that answer your question? We're just with the 50%, just to keep it simple, we're just looking to see it is basically a hurdle, right? It could be a potential hurdle or an obstacle. So if we're bullish, it could hit that 50 and then just come back and go bearish, right? Doesn't mean it's going to continue. It doesn't mean it's going to, completely reverse and then now we're thinking puts for a long term. It just means that there's some resistance there that maybe price has to pull back and then maybe TTO back to the upside in order to get above it. So at that point, you can make a more informed choice. If you're seeing that price is struggling around that 50% retrace, then maybe you may consider, all right, you know what? I've made enough money. I'm just going to go ahead and take my profits and call it a day. right? Or if it pushes through, in this case, what happened is it pushed through and then came back down to sit right on it. So for me, I'm still leaving at this point. For me, I had the 162.5s. I'm still leaving my 162.5s intact. However, if you would have kept the 160s from down here, again, I'm still keeping my 160s. I'm still going to keep them intact, right? So, actually, I need to add a caveat to that. I would have still kept those contracts intact if there wasn't earnings that day. I forgot this was Thursday, so there was earnings after market close. I do not play earnings. To me, that's a gamble. Anything could happen. So keeping it 100, I believe I took profit near the top, about 171, 172 for the 162.5s. I can't remember the percentage. I think I posted it in my channel, right? I don't care. Even if the earnings continues to like run up, I don't care. I'm not, it's a gamble. I've been burned too many times in the past trading earnings. So I hope you take that lesson as well too, because you may get it right a couple of times, but there'll be them times that you get burned hard. All right. So anyway, what happens the next day? At this point, I'm out of the trade, but let's just see what happens on Friday. Actually, yeah, because they're yep. And then Friday. So Friday we gapped up, right? Opening price is actually up here. So earnings was amazing, right? Opening price was up here at 189.05, and there's a high of 193, right? So just to recap it all, let's say there wasn't earnings though, forget about earnings for a second. Your entry was down here at 144.55 and you got the 160s. Look at where price eventually ended up. You could have taken profit in this area right here, right? Between 189.05 and 193.64 from from an entry at 144. Beautiful swing in 1 week. Now imagine if you had gotten something a month out. Now you really trading stress free, right? We established our range with the broadening formation. We knew we were coming from the lows, right? So we knew there's potential for us to go back to the top of the range. This is a weekly broadening formation that I drew, okay? We have highs up here, right? We have highs up here. And what do? We took out the highs, made a new high. So now we have made a new broadening formation. That's all we did. We made a new broadening formation. We took out previous highs, new broadening formation, and then we exhausted and came back into the range. But hell, you could have taken profit even at 180. Let's say you waited until the end of the day. I mean, you got in here. That's a 40 what 30 something dollar move at 180, right? If you would have gotten all the way at 190, I mean, we looking at a 40 something dollar move for coin. This one is actually my favorite trade of the week. I know y'all probably thinking it was SMCI, but it's not. This was actually my favorite trade of the week because it just moved easy. The only turbulent part about coins trade was Tuesday. Everything else was just ease, even with the two red candles, because it still moved in the direction I was looking for. Let me see what's up. I see. Yes. Okay. I'm switching to my strategy this week. I'm only charting buying QQQ. I don't know if I make 20. I just don't want to lose anymore. This is my third week. Put money on the line. First week lost 100. Second week 80. So I'm getting better. Cass, let's do me a favor. Put in the beginner's chat what it is. If you're only looking at QQQ, do me a favor and put in the charts your analysis on what you have for QQQ. Tag me. All right. Tag me. Because I gotta figure out. This is not shit talking, right? But this was a week of bullishness, except for again CPI, right? So I want to know what happened there. Was it and what I want to know what you were choosing for expirations as well too. What type of like trade you were, or DM me, right? DM me what your thoughts were on the trades that you were taking this week, because we want to figure it could be maybe you overtraded, it could be maybe you didn't give the trade enough time. Like I want to know what it is so I can kind of so that we can kind of help with that. All right, just let me know. All right, if you want, again, like I said, if you want to keep it private, you could just DM me. Okay. All right, cool. Because yeah, well, I want to again, like, I mean, first off, kudos to you for being bold enough to say that you lost. Because I know a lot of people put a stigma with that shit, which honestly I don't get. Like, yo, you're human. No, there's nobody walking this earth that's 100% in chart and 100% in trades. If they tell you that, they're fucking wrong. I'm sorry to say it. Like, I don't care how good any guru, furu, whatever is on Twitter. They're not 100% correct. All right. So, yeah, let's figure this shit out. Let's figure this shit out together. And if I can't, then I'm gonna bring some other people in as well too to take a look, if you don't mind, some of the other admins, because I love that they give different perspectives. And honestly, keeping it a stack, sometimes they see shit that I don't see. All right, and vice versa. So, and that's why Sal was saying like y'all should have, you know, maybe group up, right? So that that's that thing, that different perspective, in my opinion, is key to making you a better trader. All right, anyway, so that's coin. Any questions about that recap? Right, just just kind of I wanted to kind of give you guys my thought process on it. Again, I'm not saying it's the 100% foolproof way, but just kind of give you a thought process and how to do it, what to think, what are some things that you can look out for, and also take notice of, as I'm going through the trade, I'm looking at where price action can potentially um have problems, right? So you kind of want to build that roadmap as well too. All right, so let's go back to, let me go here, and then we're going to do bar rewind back to here. Okay, so Tesla, I won't say it's an easy one, but it was definitely one. If you had patience, this was going to eventually reward you. All right. Um, First off, in my opinion, Tesla below 200 is a buy. Shares, long-term contracts, in my opinion, Tesla below 200 is a buy. All right. But first thing that we do, again, we're following the same process. We want to remain consistent, yeah, is we draw out our broadening formation. Again, you can have multiple broadening formations, but I want to establish kind of the most current one, and this is the most current one that we're looking at, okay? Now, where are we coming from? Are we coming from the top of the range, or are we coming from the bottom? We are coming from the bottom. How do we know this? Because we took out a previous low, we made a new low, so now we have our broadening formation. All right. Um, Now, what else do we notice about the week? So far with the week, we have inside candle followed by a two down. How do we know that this candle is inside? Because it doesn't break the high or the low of the previous candle. So because it didn't do that, we have an inside candle. All right. Now, from that inside weekly candle, what do we end up with? Is we end up with a two down bull candle. Now, that's not necessarily an actionable signal, but it should kind of pique your interest. Why? Because one, because of where it happened, because where it happened is at the bottom of the range. We have three candles that have exhausted pretty much in the same exact range, right? If you notice, right where this candle closes, this has been basically support over the last 2 weeks. It has never stayed below that price range, below that week's closing. So that's some things that again, just some things that I pay attention to, some things that maybe are going to be helpful for you. So now we have the weekly entry. Where's my weekly entries at the top at 194.12. Weekly put entry is at the bottom. Our weekly, first weekly target to the downside is right here, so at 164.35. Now, because there's, for me, just again, not a rule, but for me, because there is a swing low here, I am also going to mark that out because price may, if it does trigger to the downside, this could be a magnet for price to take out this low and therefore make a new broadening formation. All right. If you're an ICT person, you know what that is, what just happened there. All right. So I'm gonna mark that out. Now to the upside, my first weekly price target is here. However, considering that we know that Tesla moves pretty a lot, well, pretty high, like their ATR is high, I'm probably not going to mark out the first weekly entry price target, I should say, excuse me, at $2 above, because we know if it's triggering the week up, it's probably going to take out that first weekly target as well too. So if anything, I'm going to use this as my first weekly price target. Again, technically, this is the weekly price target, but because of its ATR, I know that it'll probably take out both the entry and the first price target at the same time. So I'm really just gonna, just to keep the chart clean, I'm gonna mark out the second price target. Yes, talking to you, T. McCoy, your question, yes. But what I was referring to is what's below this swing low. But yes, to answer your question, yes, I believe that that would be considered one because it does displace above that previous candle. Now coming back to the strat. Um, so I have my weekly charted out, right? I've established my broadening formation on the week. I got my entries charted out. At least for the weekly, I have the game plan. If it triggers 175.01, my first target that I'm looking for is 164.35. So I can probably look for the 165 put. Or if I'm feeling like price is going to head all the way down, back down to the swing low, we're looking at 152.37. Okay. Now, if you wanted to, just for charting sake, if you wanted to mark out the swing high at the top here, you can. But for me, that's really far away, so I probably would walk it up and rechart it and then put it in as we get closer to that price. But anyway, that's what it would look like, right, on the weekly entries, price targets, and then swing low, swing high is what I also mark out as well too. All right, coming to the daily. So again, the daily entry is the same as the weekly, if I'm not mistaken. Yes, it is. So I'm not going to draw that out. And then I'm going to draw out my daily. Sorry, draw out my daily entry. There you go. Okay. So daily entry would be at 189.48 if it were to head down. My first target is at 185.58. But again, we know it has a high ATR, so I'm probably going to choose that as my first take profit target if I'm trading on a daily. Like if I'm just trading just for that week and I have intentions to get out before the week is done, I'm probably going to be using more of my daily price targets than I would my weekly price targets. Now, as far as price target to the upside, we have the daily magnitude right here at 196.36. Okay. Now you have to take note of the gap fill as well. Right. I believe Biker in one of his videos talked about gap fills, but just to keep it short, price could, first tap the gap fill like it did here, come back out, tap again, come back out, and therefore it'll be pretty strong resistance, and it may take a minute for price to come back up. Or it can go through the gap fill, tap the first time like what it did, and more than likely that's probably what's going to happen. Tap the first time and come back out. In this case, It can come here to the 50% of the gap fill, come back down, and then continue pushing up, or it could just come back all the way down. Or it can, if it's a strong enough move, it can complete the gap fill, then come back down, like maybe have a pullback back to the 50 and then keep it moving. Or with Tesla, anything can happen sometimes because Elon be tweeting crap, it could just bust straight through. Not only up to 217, but just break straight through the gap fill. All right. Those are the three things that could potentially happen with gap fills. But what's more than likely is going to happen is since there's a high over here, it's probably going to take out the high first and then maybe pull back a little bit, before continuing on. All right. So here we are on Friday, right? We've marked everything out. Why do we like Tesla? Because we ended up with a two-down bull candle at the bottom of the range, right? Tesla is at a discount, not at a premium, because it's at the bottom of the range. On the daily, we have a 2-2 continuation. I think XLY was showing some bullishness as well too, which is the sector that Tesla is in, the main sector, I should say, because it's also in the drive sector. Get yourself familiarized with these sectors, people. So yeah, right now even though we have a bullish bias, we still want to have a game plan for if it goes south. But now, if it triggers the 194.12,
Hey, give them the invalidation area too.
well, if it, I'm doing it from the strap point. So
All right.
if it triggers to the call side, then this is going to be your stop loss or invalidation. If it comes back down through 189.48, if it triggers to the put side, then this entry here um, would be your stop loss or invalidation point where you get out of the swing trade, right? Unless you're trading like a month or two out, in which case on the weekly is where, so if it triggers the week up, then your stop loss or invalidation would be down here at 175.01. If it triggers to the call side, then again, you get the point, right? So looking at the daily, coming back to the daily, oh yeah, let's go ahead and play, right? So let's see what happens. All right, so first thing that happened is we went outside on Monday for Tesla, right? So basically, we got manipulated, right? Because it triggers the calls, and people probably got in only for it to come back through the range and trigger to the put side, right? So with that happening, that can potentially happen, right? Where you take out a high, you get exhaustion, then it comes back down. All right. So it depends. If it were me, I probably wouldn't have gotten into it, but I do know some traders did get into Tesla today on that day, right? So let's see what happens next. So right now, if you had triggered to the upside and then it came back down, technically you're out of said trade. Now, if you got it, the trade I think that was called out was Tesla 203 March 15th. So because of your time, then technically this would not be your invalidation stop loss point. Down here would have been at 175. I'm sorry. Yes. If you got into calls at 175.01. So if they use the daily trigger to get in, which was also the weekly trigger to get in, and then it's coming back down, this would be your stop loss, right? If you were just like kind of day trading it, yeah, you would have been out as soon as it touched here. Let's see what happens on Tuesday. So on Tuesday, we came down and took out the first put target, right? So if you were somebody who was savvy enough to wait after price hit this and then it hit puts, if you got into puts, then honestly, you probably have taken your profit at that point, or holding at this point. All right, let's see what happens next. All right, so if it were me that were in puts, once this reverses, I'm out of the puts, right? Once the daily reverses, I'm out of it. I'm done. because you don't want to hold through that what if bullshit of, oh, well, what if it continues heading back down? Nope. You don't want to hold to that bullshit because what could begin to happen here is a TTO, right? Which was you get the run up, you get the pullback, and then the TTO would be once we cross, I'm sorry, no, yeah, this is the high. Once we cross this high, price is now TTO, triangle day out, which would basically trigger the stop loss for the shorts once price gets above that high. So let's see what happens next. Now, I'm sorry, before I continue, if you were to the call side, right, let's say you entered when it triggered here and then it dropped down and you've given yourself till March 15th, you could use this as a potential add, 187.26. Let me see. So are you saying you move from a weekly participant to a daily participant since it didn't trigger the put entry? No, no. So if it's for the put side, then it would have been on a daily, right? Because only the daily trigger on the put side, right? Remember, to the call side, the weekly and the daily were both the same entry, right? So for those, so when it triggered to the call side, it triggered the weekly call. So therefore, they went after the 200 with enough time on March 15th. So if you're going to the call side, you're probably focusing more on the weekly side of it than the daily side of it. If you're on the put side, because it only triggered the daily puts, not the weekly puts, then you're only focusing on, you're just a daily participant at that point on the put side of it. Does that make sense? Is that the question you were asking? My phone is going off. Seeking alpha. Oh. Hit me up then. Hit me up. We can go over it. That's fine. Probably confusing because I'm going over both scenarios, the put and the call side. But for the call side, right, since we are going based off that weekly entry, even though it's the same as the daily entry, right? When it triggers the weekly call side, let me go to here, right? When it triggers, oh, did it already? Oh, yeah, it's showing the week already. But when it triggered the weekly call side, right, our stop loss at that point is going to be down here at 175.01. So if we're going long, right, and we're choosing an expiration of March 15th, my assumption is that the person is participating on the weekly just because of how long they gave time on expiration. Because it's basically they went a month out, right? So they're probably focusing more on weekly entries and weekly triggers more so than anything else. Doesn't mean that you can't take a daily trigger, but because of the daily and the weekly being both the same entry, once it takes the week up and you're giving it till March 15th, you're probably thinking more about weekly triggers rather than daily. Now, if you had chosen the daily, if you chose to be a daily participant to the call side anyway, then you would have been out of it once it came back to your stop loss, which would have been down here. What the move would have been here, 2-2 down on the daily. There's these two candles before we get to this one. What was the trigger on the daily? On the 2-2 down? Hold up. All right, so let me do it like this. Let me just get rid of all of this real quick. Okay, so you talking, all right, so right now we got, well, this is a 3, and then this is a 2 down. This is the one that you're talking about? Right. Yeah. So that's, you want to know what the entry would have been like once these two candles happened already? So if that's the case, then this would have been your, sorry, give me 1 second. This would have been your daily entry to the call side. And then this would have been your put entry to the downside. And then this would have been, if you're doing it just from a daily perspective only, this would have been your first target. So if on Wednesday it triggers to the upside above 187.26, then you probably are looking to take maybe the 190 or the 195 call for Tesla at that point, right? So that would be your entry to the call side, and then this would have been your entry to the put side on the daily, just from a daily perspective only. After these two candles happened, all right. Does that help? I'm really asking because I mean, we could take. I would just want to make sure we get it, so we could take time on it. That's cool.
Yeah, I'm gonna pop on just so to make it a little bit quicker. Hi,
Yeah,
Tensho. Okay, so what I'm seeing here is the call entry was on the weekly and the daily, right? And that was
originally, yes.
okay. And so then Friday, February 9th was that green two, and then Monday, February 12th was that 3-3, right?
Yeah. So put the numbers back. All right. So this is the Friday. Started as a two up, and then on the Monday, it went. Oh, why did it take it that away? I don't know why it just took the numbers away. That's weird. Hold up. Yeah, I don't know why I took the numbers away, but it. Oh, it stopped working. Memory limit. Oh, I guess I will. I'll put it back later. But yes, on on the Friday, we went two up, and then we went. Yeah, okay, that's weird. It came back. All right, and then we went outside candle. So we took out. Let me clear everything. So we took out the high of the previous candle, and then we also took out the low of the previous candle. So we went outside, and it was aggressive selling. So probably a combination of profit taking, probably for people that entered down here back on this day, at last week basically. Probably you get some profit taking here, and then that's why the pullback. But go ahead. If you had another question to follow up to that.
Sorry, I lost my train of thought. So you would not have, I think I was confused because you were talking about entering into puts. And I think I was looking at it from where would I have entered because
Put.
that kind of hadn't really closed. And so I was wondering, like, would you have gone down to a lower time frame or when would you have entered puts? Because we had
Oh, okay.
started talking about
I got
calls
you.
and
I
okay.
got you. Yeah, yeah, I got you. Here we go. So on, I would have entered puts. Let me change this to daily entry, and then I'm gonna put um, put. Now you could go down to a smaller time frame if you wanted, but technically you don't. You don't have to because remember, I know we always say you don't have to be the first in, but once price action triggers to the upside, and this is what I was talking about, that there was potentially a trap here because once price triggered to the upside, you probably had people jumping in calls at that point once it triggered to the upside here. Now, then when it comes back through the range, what more than likely happened is whoever's looking at this chart that's a stratter probably has the 50% retrace drawn on the candle. They want to see where price at what price action is doing. If price gets below this 50 and holds below it, again, this is something that Sarah Strat Sniper found that whenever price is reversing, it's a good way to help to find potential outside candles as they're happening because that was one of the questions that come up. How can we see outside candles or potentially see them before they actually happen? 50% retrace is one of them. So what would have happened for the puts is once they seen that that's happening and that it's staying below the 50, this entry, right, is still an entry. It's still your entry to the downside. It's still a put entry to the downside. So even though we triggered calls, doesn't necessarily mean that, when we come back down, that we can't take the put entry as well too. So yes, the calls got invalidated. Once it came up, got invalidated, came back down through the range, went below the 50%, and then now we're about to trigger puts to the downside. So this is probably where, if anybody was entering puts, would have the 189.48. And if they're using, which I would recommend using the daily targets, that would have been their first target at 185.48. Excuse me, 58. So I probably would have, if I was playing it to the downside, and again, just that from a day trade, maybe hold it over one more day perspective, I would have entered on 189.48, and then I would have targeted either the 187s or the 185 puts for Tesla.
Okay, so that really makes sense, and that's why I feel like that's why I asked if you moved from a weekly participant to kind of a daily participant because we were waiting for the calls to entry on the weekly and the daily, but then we shifted into what is happening on the daily. So for me, that kind of that's why I was asking if you moved from a weekly to a daily.
Honestly, honestly, Shelly, trading Tesla on a Friday is something I don't recommend at your skill level. And this isn't, talking ill of you or anything, but when you trade Tesla, as volatile as it is, even at these price points, you have to be on point and it has to make that move immediately. So you can jump with the greatest of entries on Tesla and be down, 30%, in a matter of minutes. So I advise you, if you're gonna trade it, choose the next week's expiration. And if you notice, I've been choosing next week's expiration for a lot of my plays, especially on Fridays, because if it's gonna make a move in the direction that I choose to call it a put, you're still gonna be able to score. Though it won't be a higher percentage, had you chosen it for the zero, day trade entry or whatever. You know, and I know I chose the 200s for 315, and I was also in some 200s weekly that I chose a few weeks ago. Um, yes, it costs more expensive, but the run up of Tesla, I expect Tesla to get up to the 217 area. Now it may not, but I have high conviction in it. And right now, so Tesla did go down a little bit towards the end of the day, but right now those contracts are still, $660 a contract, and I have 30 of them. So those will absolutely pay. And I have my invalidation points, already drawn, whatever. If it goes down, it'll, I expect to lose maybe $100 or so per contract, in which I'm already in extremely, great profits of it. And that's why I chose that expiration, because as it goes up a few more dollars, the intrinsic value on those contracts will continue to climb. I expect it to potentially get up to $2,000 a contract. I'm not saying it will, but it has great potential to do so. And this is why you have to, be mindful of the contracts and expiration dates that you're choosing.
Hmm. I appreciate that, Uncle Sal. So I think what I'm looking at, and you're right, like I would not be trading this because I'm still very new, but I'm
Yes,
wondering
ma'am.
how this thought process would apply to other stocks. So same thought process if I'm entering in on the weekly and the
Hmm.
daily are the same, how being able to shift down to watch the daily would apply across the board. So I'm not specifically looking at it from just Tesla, but just
I get you.
understanding the concept and the thought process behind it so that my mind can also shift
No, you're
if
good.
needed.
You're good. I think so. So your mind would shift going from the weekly down to the daily is if okay. So it really depends on how long you're looking to hold the trade for, right? Your expiration. So if you're, let's say in this Tesla trade, just using it as the example, you shift back to the daily in this case because it went bearish, and we weren't looking to trade, long term on a bearish side. But
Right.
let's say we're to go calls. If you had gotten, like Sal said, he had gotten the 200s as a weekly, okay? So if we were to shift down and get something as a weekly, the 200 calls, the moment that it hits this daily entry, which also again was the same as the weekly, and it fails and comes back through and hits the daily stop loss, I'm out. I'm done,
Right.
right?
Right.
Because I'm only focusing on the daily perspective. Now, if my intention was to trade it, even though again the daily and the weekly are the same entry, if I'm trading it with the intention of holding it for quite some time, i.e., a month, maybe 2 months, then this pullback here and hitting this daily stop loss does not scare me, because that's
Got
when my mind is shifted to the weekly participation group and what they're doing and whether the weekly stop loss has been triggered, right? So we triggered weekly calls, but we have not triggered our weekly stop loss. So for me, if I'm swing trading this for a very long period of time, again, a month out or two, this trade has not invalidated yet for me.
Right. Got it. Okay.
Okay.
It's clicking. It's clicking. Thank you.
All right,
Appreciate
cool. No problem. No problem. No problem. Again, thank you for asking the questions, because this is exactly what we try to zero in on, right?
it.
A couple other things that that I noticed just for me, right? I pay attention to different combo setups strat wise. So not only am I looking at pivot machine guns to the upside, but I'm also looking at pivot machine guns to the downside. And what a pivot machine gun to the downside is when you have 5 or more consecutive candles where the high of each candle is higher than that of the previous range. One, two, oh, come on, 3, 4, and 5. It's not always a guarantee, but when you have that, what you can get is a potential pullback to at least take out some of the targets heading back to the downside. And if we play, we'll see that's exactly what price did. Took out that target, that target, that target, just didn't come back to take out this one. All right. Let me see. I got a question. You mind if I come off my? Yeah, come on through. Come on.
Yeah, this is my question, and I know the answer, but it's kind of to help the people that I'm hearing their question is. So let's say I was to take the daily trigger up, right? Or up that two up. I take the daily trigger, starts falling back through. Whether I was a week, well, let's say I was a daily participant, right?
Mm-hmm.
So as far as things being invalidated, so to say, technically I have to wait until the end of the day, because a lot of times we see things might go below 50% and end up by the end of the day above it, which means it was a TCO and the trade is still valid at that point. I would have got shaken out. So
I'm sorry, go ahead.
So as far as that, right, it's almost like you gotta have, in my opinion, kind of like, and I don't want to go too far because I know it's people here that's beginners, but almost kind of like maybe take it down to a 4 hour or a lower time frame to kind of see exactly what's going on, because just based off of that rule of thumb, you'll be shaken out. But to your point, it is such thing as CCOs, it is such thing, and you don't want it every single time some triggers and goes back down, you out, because that happens a lot with strat entries. That happens a lot.
That is factual. Yeah, it does happen a lot with strat entries. The thing with strat entries, and I'm keeping it a buck, right? And I don't want to say this in a negative way, but Biker says it perfectly where he says, when an entry is taken, that like this entry, for example, this call entry is also somebody else's take profit, right? And hopefully y'all get what I'm saying, right? So let's say somebody had entered in down here and again, they're a daily participant, right? They took the 184s once we went 2-2 reversal, right? And let's say they were targeting up here at 196.36, right? price runs up, hits up here, like takes out this high, right? Doesn't quite get to it, but you may get people saying, you know what? I mean, I'm good. I came in at 184. I'm all the way up at 194. I'm good. I'm gonna just go ahead and take my profit. Boom. There's your pullback, right? So yes, can you go to a smaller time frame? Absolutely. Like when you've seen this three happening, if you want to go down to the 4 hour or to the hour, and you want to see if price, like let's say, dips below it, dips below your stop loss, which would have been here, right? Comes here, then you could have zoomed in on a smaller entry or smaller time frame to see if price might be exhausting on that smaller time frame and reversing, which would give you kind of an idea of like, okay, maybe it's going to come back. Or you could do what most, what most try to say when they say go ahead and exit, because you can always come back and find another entry. All right, just because the trade didn't initially work doesn't mean that you were wrong about direction to begin with. It could have been just been your execution, right? Maybe we entered just at the wrong time, but it eventually goes the way that we want it to go. All right. Now, to continue on, coming back to just from the weekly perspective, right? So again, we triggered calls. Let's say we're looking for the 200 call March 15th. All right. It comes back down. Again, we're thinking about this from the weekly perspective. So again, that's our stop loss at 175.01. Okay. So we haven't hit stop loss yet. So we're still in set trade. Now, with it coming down, making a 2 down and then giving us that 2-2 reversal, that was an add opportunity at 187.26. Whatever amount you wanted to add, whether that be one contract, whatever, right? There's your add opportunity. Okay. Now let's keep it playing. What happens the next day? Voila. Not only are we back above our original entry, but we added here, right? The same 200. So now we at 200, right? So now you have decisions that you can make. I'm sorry, I forgot to put back the gap fill. All right, so, right? And why do I have a line in the middle of the gap fill? Because of the 50% retrace. So now price is holding above it. So we have decisions to make. We can either take profit and leave the runners, right? Especially considering, and that's probably what I would have done, especially considering that we have, we're above the 50% of the gap fill, right? So let's see what happens, right? But either way, if you wanted to take all your money off the table here, that's absolutely fine. That's on Thursday. Now, I think on Friday we get a pullback because of OPEX. Let me see. All right. We did, but actually we're sitting currently on the 50% of the gap fill. So we got up high. We actually made higher highs at 203. Again, like I said, at that point, you could really take your profit, leave runners, or if you got the big nuts, do your thing. Okay. But we're sitting above the 50% retrace on the daily of this gap fill. So from a weekly perspective, we have zero reason to invalidate this trade. Now that's why I'm saying you could take profit if you want to, but from a weekly perspective, especially considering that you're giving yourself till March, you have zero reason to exit this trade right now. And this is the importance of not allowing a red day to shake you out, because when you look at the higher time frames, you don't have a reason to be shooken out. You still have 3-4 weeks, I think, until March 15th. Anyway, I hope that helps. And if there's any questions about that. Man, I know I took up so much time. Actually, we're only an hour and a half. So yeah, I got enough time just to show y'all Lily, unless there's any questions about Tesla. Any questions at all? Any questions at all? Let me see. Timothy, yes, this was very helpful. Okay, cool. All right, cool. No questions about Tesla. So last one, we're gonna go over Lily real quick. That was, I mean, Lily's pretty straightforward, just keeping it a stack. Like, honestly, there's not really much to say about it. Um, you know what? Because we know Lily runs, and I mean, looking at it from a weekly shit, even from a daily perspective. All right, let's do this. Let's look at Lily. Uh, let's look at Lily from a swing standpoint. Let's go back to let's cut off. Yeah, let's cut off. All right, let's cut off right here. Right. All right. So we got highs on Lily. I'm going back to December. All right, y'all. Because I mean, again, it's all positive flow. So I want to kind of show y'all, all right, you know, kind of what you can look for. So this is coming into the week of January. So we're gonna go ahead and mark out our weekly entries. Upside, downside. We could do our broadening formation from there to there. And then also, honestly, because of this wick, I'm gonna just draw it from there to there. Because technically you could do it like this as well too, but honestly, we cannot ignore, I feel we can't ignore that high right there because it tried and it couldn't really do it. So I feel like this is gonna be a little bit more of a heavier, not a heavier, but this is probably gonna be that resistance before coming to here. So, all right. So we have our broadening formation. Again, more than one broadening formation can be drawn. That's completely fine. Bottom line is that we see that we're exhausting after taking out, actually, no, it's technically it's from there, because that low was taken out by this low right here. So we have our weekly. Then we also have our weekly price target there and right there as well too, right? So there's our weeklies. All right, so broad information established. Again, make sure you look at time frame continuity. Um, I can bring it back. Let me just bring it back. So time frame continuity so far is showing we're bullish on the quarter, bearish inside on the month, and then weekly is green. So is daily as well too. Okay, so majority of time frame continuity is bullish. All right, so let me go take this away again. All right. All right. So why do we like Lily? One, because we get the 2-2 reversal on the weekly, right? Even though it doesn't look like that much of a drop, we did drop to create a new low. So again, coming from the bottom-ish of a range. Also, price action and where it's been kind of finding some sort of support, right? Same three areas around 570-ish, right? So good chance that there's potential for a reversal on the weekly, right? Now coming into the daily, oh, good. Finally, a weekly entry that's not the same as a daily entry. Good Lord. All right. So daily entry as well too. And then also weekly entry. All right. And then all right, so and then I'm not going to draw out the first daily target because the first daily target is actually a weekly entry. That's just something you want to make a note of. Okay, so we have the daily, but again, looking at the week and then also looking at the month, I'm probably looking to trade this a little bit more of a swing, not necessarily from the daily standpoint. So I may take the daily entry, but my targets that I'm looking for are gonna be weeklies, not the daily targets. I'm only marking the daily targets out for those of you that may be doing it from a daily perspective, right? Now, from the daily, we have 2 up, 2 down reversal, but obviously this candle is a bullish candle, 1. 2, it actually closed above the previous day's close and open for that matter, right? So, there's potential for it to continue pushing up. We don't know for sure yet, but it's potential for it to continue pushing up. So what happens on the next day? So on the next day, we go 3, right? What happened is that we came down, we took out this low. As you can see, we just wicked it. We took out this low. And remember, you don't have to be the first one in. So what you could have done is wait till like it enters and then wait to see if price comes back to retest that entry, which it did. And then it took out the other side. So again, for me, if I'm watching this, right, I'm looking at the 50% of the previous candle. Once I see price start shooting back up above that and holding above that, maybe on a smaller time frame, then I can be more confident in taking the daily entry back to the upside. Now, the daily entry and the weekly entry were triggered at 586-ish, right? One's 0.717, the other one's 0.69. So 586-ish. I am targeting the 600 calls. So this is back in what, January? So I'm probably targeting the 600 call if I'm doing a month out, February 16th. I don't know what the cost of it would have been at the time, but yeah, that's probably what I'm targeting, right? So far my trade is going well. I'm already at 592.20. So my trade is going well, and it's only, what's that, Tuesday? Yeah, so it's only Tuesday. So let's see what happens. Even better. Must have been some
Hey,
music.
one thing about Lily is from trading it over and over is it'll consolidate for a while, for a few days, maybe a week or whatever, and then it'll just explode. Like literally, it'll rip, 20, 30, $40 in a single day.
It,
So keep that in mind, like when it'll look like it's being manipulated, but it's not. It's just, consolidating for that higher move up. And now, this in SMCI is sort of different in price movement, though this one right here has some huge financial backers behind it. That this Lily is not manipulated or overvalued in no way, shape, or form. Lily has been on a tear since last year. Um, the guy Ian, he has been on it, and he has been, advising his members of his Red Panda group to invest in it long term. This here is a particular stock. It's something that you want to hold long term. I know the price point is very high at this point, but I stand behind this product. The same way that Denzel did in American Gangster. This is something you want to trade over and over.
Blue
As the
Magic.
price climb, yeah, as the price climbs higher and higher, the premiums will cost higher. But this is a particular ticker. It doesn't have any price targets unless you draw your fibs. And I actually got wind of this based on just trading it and on the flow. And it's something that's going to continuously, go up and up, and it gives a damn if the market is red or not. you know um and I think this is something y'all should keep your eyes on, seriously.
Okay, so one thing I want to mention, what I've talked about before about walking my targets up, right? So obviously on the weekly, our target's like knocked out, right? Gone. So we walk up the next target, which was 62, 625, and then also this would have been your other week. Oh, shit. This would have been also your other weekly target as well too. 629.97. At this point, if you are in multiple contracts, you've now hit all-time highs, right? So at this point, you could, yeah, take your profit, right? It's up to you. Now, if you have time, this is why I get time. I don't get time for the initial package. I get the time for the runners, right? Because in my mind, when I get into these trades, I'm expecting the move, not like to like a large, move like what Lily just did, but I'm expecting a move in favor of the bias or the contract that I got in. And then at that point, I take profit off the table, leave the runners for them to just do what they do. Now I am stress free because I'm playing with house money, so to speak. Although that's not entirely true, but yeah. All right. So at this point, next target 625.87 and then 629.97. Again, you can take profit at this point, or you can keep it moving, hold, and see what happens. So what happens is we end up with another 2 up. We take out both targets, right? We end up with a higher high. Now, if we continue pushing, that's your next target. Let's get rid of that. Now, we haven't hit the top of the broad formation, so technically there is still room to keep moving. But we do have to take into account we just ended up with a 2 up bearish candle, right? So let's see what happens. So we ended up, it did trigger to the downside. So again, at that point, if you wanted to take profit, that's fine. Day ends up as a 2 down bull candle. You may actually have an add opportunity if we trigger to the upside. Somebody trying to say something? Oh, okay. If we trigger to the upside, right? So let's see what happens. All right, so far, we could have added at 619.94, and that's still holding to be true. Even though we dipped down, day candle ended as a hammer. So now we actually have an actionable signal. So if we didn't enter here, we also could enter here if we trigger to the upside. Let's see what happens. Right, so we end up with a 2 up candle, and then we end up with another 2 up candle. But, right, you see we're exhausting around that same previous high that we created back at 636. So we actually had a little opportunity at 620 to maybe grab, using the 636 as the target. We could have grabbed the 635 contract. Again, it would have been expensive, but still could have made some money off of that. That's a $15 move right there. Let's keep it moving. Still going up, nothing really to talk about there except for we have a new high. But again, we don't really see signs of exhaustion just yet, so I'm just gonna let it ride out. Okay, so we got a little sign of exhaustion right there with that candle, right? We're working on a little PMG downside setup. All right, so let's see what happens. So again, at this point, if you were in, so again, just talking about, a trade within a trade, if you jumped into those 620s or added at 620, right, when it took out this high again, right here, then you could have taken profit, right? Or when it hits this high of 647 and you see it's coming back down, you could have taken profit. And again, left runners. Let's see what happens. Okay, we get a pullback. Keep in mind, though, if you were in your original trade entry of 586, honestly, you could still hold this trade, right? You could have exited here on this 2-2 reversal if you want to. That's fine, right? But as you can see, if you just stick with one ticker, right? Let me close all this up out real quick. If you just stick with one ticker, even though you got in at the original 586, maybe you took profit, you stick with the one ticker, it gives you other opportunities to jump in on the way up. So now here you got a 2-2 reversal. Keep it going. Right? So hold up. I'm sorry. You got the 2-2 reversal. You probably targeting up here. Right? So it did pull back, doesn't hit your stop loss. Right? And you end up with a hammer. So you potentially have an add opportunity there at 630. Again, targeting probably 650. Let's see what happens. Hammer, right? So again, went up, so you're in profit, came back down, probably not so much, maybe still green, right? But it's still a bull candle, right? So that actually gave you another add opportunity there at 632 because we get a 2-2 reversal. Or you could wait to see if this hammer triggers and then keep it moving. Boom. And then once you make that higher high, you could take profit again, right? You were targeting, let's say again, you got the 650 con, right? Once it goes up and makes that higher high at 663, you can take your profit. So what's that, 3 times now that we talked about where you could have entered on Lily and taken profit and still held on to your original swing trade as well too? So yeah, y'all get the point, right? I don't really have, do I have to keep, I don't have to keep going, right? Y'all get it. But I mean, because obviously if eventually, we all know where Lily went. So if it eventually, if you keep holding, this would have been an amazing trade. So y'all get it. All right, so that is it for me as far as the 3 different tickers. Again, I will pull out more, not more. I will try to do this every single week and just kind of recap and look at, again, different ways that we could have. I want to just open your mind to just the different things and the different things to look for. And you don't have to do everything that I'm suggesting right now because I know that could be information information overload. However, if you pick out maybe 1 or 2 things, like for example, if you pick out this week, I'm going to focus on adding the 50% retracement to my bag, right? And I'm only going to focus on that, right? Then I'm going to come back to the video again, and now I'm going to focus on doing this. Just keep adding little things to your bag. So don't try to add everything at once, but I wanted to just kind of talk you through some of these trades and kind of so you understand like what we're thinking in the moment or could be thinking in the moment, again, to open your eyes to the different things. But honestly, if you had gotten the 600, remember the original trade was, what was it? When did we cut back? In December, right? Somewhere in December is when we said we were starting. So if we had gotten like the 600s February 16th, right? This February 16th was just that day, right there at 700. So imagine at 586, grabbing, or hell, let's even start from January, right? January. No, I'm sorry, it wasn't in December, it was heading into January. So we entered this one right here. So we entered off of this trade. That was our original entry, 586.17, and we gave ourselves the 600s for February 16th, right? So let's say, obviously, you may not hold it all the way to February, but let's say you took profit maybe at the top of the previous week, right? That's, February 9th. Yeah, that's February 9th, right? So from 586 to 740, tell me that's not an amazing swing. And let's say you had the mental nuts to not be swayed by, what is this? 1, 2, 3, 4, 5, 6, 7, a total of 7 red days before you exit. Alexa, be quiet. Right? So that's a pretty damn good swing. Thank you, Dr. D. FOMC on Wednesday. Oh, yo, yo, oh my gosh. I'm not gonna say nothing. We just gonna see what happens on Wednesday. I'm not gonna say, but damn. I'm not gonna say that. All right. Because I got a feeling, boy. But anyway, yeah, I mean, this isn't, like I said, it's an amazing swing. You got the 600s, and then yeah, it rockets all the way up to 740. This would have been, see, I know all y'all were focused on AVGO, y'all were focused on SMCI, but this would have provided you that type of a trade. Real shit, it would have. So anyway, Yeah, this video is a lot longer than I thought it was going to be, but so give me some time to get it converted. I'm probably
It's
going to
very
get,
hold up, don't end it yet. This was a very informative class, and I'm sure this is probably shocked you. But I'll tell the people of you all who have been smacking and who have now the amount of money in your portfolio where you can get multiple contracts on these particular Ferrari tickets. You can absolutely play the same strat setup. Even if I don't alert it or anything, you know, those of you all who are truly self-sufficient, if you like a setup, simply swing it, like Dr. D and others. Um, you know, I know I'm gonna forget somebody else, so don't hold it against me. Um, if you only want to swing it for 2, 3 days, that's fine. That'll be 70, 80, 100% type of play, and this will allow your account to continue growing.
oh
Like
yeah,
the MSTRs, when crypto is running, that's a ticker that it costs quite a bit. But you can grab 1, 2 contracts and you'll get paid tenfold off of it. Dr. D smacked for like 6, 7, 8K off of MSTR. Now I didn't call it out, and I don't call it out purposely because I know it's rather expensive. But that's a ticker anytime crypto is running that you can smack the shit out of, and it's gonna pay you tenfold. The Ferrari list is a list that you can, it's really geared to only do 30, 40% a day. 30, 40% a day off of one contract that will give you,
three,
two
four
to
hundred
five hundred.
dollars
Yeah,
probably.
easy. And you do 5 of those a week. That's $1,000, and this is more or less geared to get $1,000 a week. Hey,
Yeah,
$1,000 extra a week, nothing is wrong with that. Now, when you keep on compounding it, the $1,000 extra week grows to $5,000 extra week, $10,000 a week, $10,000 type of month, and that's truly what the Ferrari list was built for.
yeah,
You don't have to get the 100%. Trust me. As your portfolio grows, that's when you focus on the percentages and the charts as well. Trust me, this is truly a marathon, and you all will see. As long as you're right, you will. Your portfolio will grow. You'll be more happier, and you'll have more freedom.
yeah. And then to Sal's point, yeah, he said what, 2 or 3 days later it hit. It did, right? This is a swing trade. Entering on Monday, and then yeah, you got, let's say, you got the 600s and you gave yourself time, but yeah, I mean, at this point, even here, 2 days later, 3 days later, I mean, yeah, you could have taken profit right here, and honestly, you could have been fine with that, right? Don't ever do that. Look, I'm like, I know I do it too myself, but you don't always have to do that look back and like I left money on the table. No, you didn't. You secured your goddamn bag. Real shit. You didn't leave money on the table. The assumption with that statement is that there was all that money was already there. But if you knew that money was already there, then you would have never left to begin with, because then you could tell the future. Make sense? So please stop telling yourself that you left money on the table. No, what you did is you took the information that you had in hand at the time and you made a decision. There's no right or wrong with it. You made a decision, and your decision was to err on the side of caution and to hold your money. Nothing wrong with that. Whether it's $5, 10,000, whatever. Because I'm gonna let y'all in a little secret. Nobody catches the top, and nobody catches the bottom. The exact top and the exact bottom, nobody catches that shit. Not retail, at least. So it is completely okay to take your profit. Doesn't mean you migrate away from this ticker. It just means you can continue to stalk it for another potential a potential entry, which it gave right here at 623. So now at 623, you can then look at potentially the 700 or whatever the high is that you're aiming for at that time. Now you get two bangers in one. You got the banger from 586 to 636, targeting 600. Then you get the banger from 623 to 740. And the beautiful part is you probably use the profits from round one to pay for round two. I hope that makes sense. All right. Love, peace, and chicken grease. Y'all have a great day. I'll see y'all later. I'm probably gonna go ahead and drop a sector review. I'll probably go live after the gym later on to drop the sector review. When I say live on YouTube, hopefully you subscribe to my page. If you don't, I'll drop it in the chat, the link when I go live. But if you subscribe to my page on YouTube, you'll get the notification. Can I say something? Yeah, take yourself off mute, Dr. D. That's fine. Go ahead. Just keep in mind you're on recording though. Just letting you know.
Okay, can you hear me?
Yes, ma'am.
Okay, I wanted to say something to everybody who was watching, what was it?
SMCI.
SMCI. To not let anybody get caught like I did. I was in a place from the beginning, from the end of January until last Friday. So I was in it for a long time while it was constantly running up. I was over 2,000%.
You said from the end of January or beginning?
No, from the end of January. I got in, I think, the beginning of March. I'm sorry, what is this? February, beginning of February.
Beginning of February. So you got in probably there. So boom, boom, boom. Okay, go ahead.
Was
Oh,
in
wait,
for a
yeah. Oh, yeah.
long,
Okay, I'm right.
and
Go ahead.
still my did not expire until March 15th. So of course my plan was to still stay in it.
Mm-hmm.
I
You
know,
you stayed through this. Did it, you stay through this?
yes,
Okay.
because I had time on the contract.
Yeah, okay. I get it. You were letting your nuts drop. I get it.
Yeah, so I was like, okay, well, and the contract cost me $1,000. It was $1,000 contract. Like
Uh-huh.
the strike price was $1,000. So I was far out,
Right.
and it was March. So by the time I sold it on Friday, even though it was down, I paid $1,000 for it, but it was still over $9,000 when I sold it at a loss. Well, not
Hey. Well, not at a loss, but on a red day. I get what you're saying. I get what you're saying.
Hold up. How much it was?
9,000,
God damn, Dr. D.
8,000,
yeah.
8,000 a con. I mean, that's beast. That's
And I only
definitely beast.
because I wasn't really sure.
Hey, I ain't lying. Sometimes when you text me and stuff, I be like, God damn, I didn't know she be holding that shit that long. You know, like
Drop
one
your
day she
nut.
hit me.
Drop your
Yeah,
nuts.
she
Drop
she
your.
been dropping them for sure. You
Now
know, and then
But
when
she'd be like, hey, don't call me a little P. You know.
so
but I just want to explain to everybody that sometimes you have to go ahead and use common sense and take your money, because even though I still had almost a month left on the contract was still already over 2,000%.
yeah,
Or that morning when I woke up, it was $16,000 for a contract that I paid $1,000 for.
yeah, definitely take your money.
Right. So
At the very least, leave a runner if you still want to stay in it. But yeah, definitely take your
I
money. And
had that
honest,
one because I was just testing it out.
right? Okay, that's cool. Hey, that's cool because minimizing risk. Then, I mean, yeah,
Yeah.
you only risked $1,000, and on the tear that you've been in, that's not. I don't think that's 10% of your port right now. So yeah, that's good risk. That's good risk. Real shit. Like I mean that. That's good risk management. You only bought the one contract. I forget what you told us the last time your port was at, but I know that only risking 1,000 is less than 10% because I know you're over 10,000 in your port. So you risk less than 10% of your port. Yeah, that's a beautiful trade, right? You risk less than 10% only to come out. What's the math on it? 8,000% on the or whatever the number is,
Right.
$8,000 more, excuse me, $8,000 more on the contract, even with this red day. Yeah, that's shit. Put up 1,000 to get 8,000 back. Yeah, I'll take
Yeah.
I'll take those numbers. I'll take
So
those numbers any day.
just point out to everybody that the more you make, I did not follow my own rules on Friday, and I increased my position size, which I normally don't do.
Mhm.
And so I lost, I made 18,000 on Thursday and lost 16 on Friday.
Oh wow, Jesus. Well, it's
Yeah.
still technically profitable, but yeah.
And I'm still, all of this is
But she
still
could have,
No,
you
no,
know.
I know.
So
I'm keeping silver lining,
I
but yeah.
know, I don't, so like I know by now you all know that me and her converse like quite a bit. And had she told me she was up X amount of dollars, I would have told her, hey, take profit immediately. I don't give a shit what else happens, take it.
right.
Yeah. No,
And that's ultimately what she should have done,
right.
early that morning.
No, and I'm glad that you're pointing this out, so we all as a community can learn from it. But this is what I mean when I say, like, it is, you have to be okay, psychologically speaking, with taking profit, right?
Right.
Do not worry about the whole what if it continues run. Because again, like, that's the beautiful thing about the market. It probably will give you another opportunity to come back in. I mean, don't get me wrong. I think SMCI still has some room to drop a little, but it's going to find support somewhere, right? It's going to find support at some point. And this could very well be, not that I'm saying it is for sure, but this could very well just be a TTO. Real
Right.
talk. So it is okay if you, and this is why when you hear me type out round one, round two, because what I've done is I put my initial investment in, boom, take my money. Maybe I'll leave a runner or I'll take it all off the table. And then what I'll do is I'll use profits from that one to then buy round two. Now, it may
Right.
not be as many contracts, but I feel good about this entire trade because I've already killed round one. So even if round two ends up being a losing trade, okay, it is what it is. Round one, I still murdered it, right? But if round two ends up being, okay, let me go into it, it hit my high, let me take my profit off, right? Now we have potentially round three. And well, actually, the longest rounds I went was with CCL, 5 rounds actually, right? And that's what I'm saying. Whenever you get done with the ticker, it doesn't mean that you got to jump on to the next one. I know in the chat we're constantly talking about, hey, this one running, that one running. So I know like your eyes are darting all over the place. But if you get a ticker that you know intimately well, I'm talking French toast bonnet in the kitchen. Where all the tattoos at. You know where that little birthmark is that nobody else know about. If you know the ticker that intimately, don't run away from it because it could give you another money making opportunity, especially if you charted it out and you know the levels.
Right. Your analogies are just reading the comments most days, especially if I'm in school, but I was homesick with the flu last week.
Mm-hmm.
So was home and able to really concentrate on the trade. But I'm hoping that people don't I would say that I was almost paralyzed by how fast my account was growing on Friday
Mm-hmm.
because I was literally distraught because I went to bed at 60 something and woke up at 80, like 82, 83.
Mm-hmm.
And
Yeah.
instantly it came down. So I
Yep.
think that certain tickets can move so fast.
Yep.
So you almost have to take your money as soon as you see it.
Right. And that's also what Sal was talking about with the Ferrari list, how he intended for that to only be 30 to 40% wins, right?
Right.
Because y'all, and again, I don't mean this in a chastising way. You guys are trying to hit home runs off this shit. And again, I get it. I do, right? It is motivational. It is inspiring to see I made 20K today. I made 17K today.
Hey, trust me. Listen to me though. Trust me. There's gonna be multiple traders in here this year that clip well over 100,000 who was intended on just making $500 extra a week.
No,
Watch
facts.
what I tell you.
Facts. I believe that to 100%. I do, right? Because as long as we continue to practice these these disciplines, yeah,
And
for sure.
they gotta pay attention to the details too.
Right.
One thing you all have to understand though, these tickets that move fast, they can turn on you like a New York second. You have to be mindful of that, and that's where you got to hone in on your disciplines. Seriously.
Right. That's my point, right? So
And
that's
that's
the
what
reason. I'm sorry.
um,
Let me just say this. That's the reason why I forget who it was that asked me in the group. Al, was I holding coin? Right. I'm on round 2 for coin, and that's am I holding coins through earnings? No, I'm bullish on earnings, absolutely, but no, I'm not.
Hey, we go hold on. One thing about this here, with as many tickers and trades that go ballistic, we don't have to gamble on earnings. And this ain't on no bragging shit or nothing. We hit multiple ballistic trades a week in a single week. No other place is doing it. Seriously. Look at this year alone. The market is running and we running wild. You know, we just hit Lily, we hit Coin, we hit SMCI, AVGO.
Right.
Um, Adobe would have paid you all, you know,
Puts
20
wise.
times.
Yeah,
Yeah,
puts wise. Yeah.
you know,
I'm mad. I'm mad. I accidentally turned off the alert for Adobe. I had an alert for the put side. I did. That's why I was mad. It didn't trigger, and I went back and looked. I was like, oh shit, I must have turned it off. But yeah, yeah,
and don't just focus on what we put out, though we hit quite a bit. Focus just on that Ferrari list or whatever. I mean,
yeah.
it is trades that I don't put out that I have my eyes on or whatever, and I be so occupied during the market hours sometimes. Sometimes I may forget. Or sometimes, you know, and a lot of people hit me up either DMs or texts or, you know, Twitter. So my mind ain't on what it should be on. You know, but this just is the shoes that I'm in, you know.
Yep.
And I won't never cry about it or nothing. I mean, it is what it is, you know, but you know, and there's some traders that, you know, like Allie. Allie hits quite a bit. Allie is a sniper, though Allie don't talk a lot.
Yeah, I see she got
Um,
the Adobe puts. Nice,
yeah.
Ellie.
Um, you know, Dr. D, I don't tell her what trades to get. Dr. D go, I don't know what she in until after she tell me. You know,
Yep.
quite a bit of them, you know.
No, that's the way it is for my mentee too. She doesn't tell me what she's in until after the fact. But like, dude, like, I just want to point this out. Like, as we're focusing on the popular, I guess, the popular crew of the. I mean, dude, MRO would have paid you. MRO
Hey,
is just
honestly, too, though, honestly, too,
what's that?
acclimated trader is a damn good trader too.
Yeah, he is.
I don't know. I don't know if people pay attention to him, and I know he a little different, you know.
No, the
But
way he
that,
watches VIX helps a lot, honestly.
yeah, that dude a damn good trader, and he's building up his account from small. Then he always text me like, man, you know, how could I miss, you know, this play? But man, this man be watching like quite a bit of tickets at one time because he
Yeah.
had, you know, quite a, you know, he has that multi-screen. I mean, he has multiple monitors.
Yep.
But sooner or later, this man is gonna hit him a huge day too.
Yep. So I mean, look, you don't always have to fall in love with the popular. Um, I'm sorry, I'm just like scanning and looking at different things. You don't always have to fall in love with the popular, tickers. There's always money to be made out there. And then again, yeah, if you see your bag, take it, right? Just take it. It doesn't matter what happens next, take it because that money ain't yours until you pull it out the market. It's nice to watch it run up, but it ain't yours until you pull it out the market. Just saying. So anyway, this is gonna take a minute for it to convert. Love, peace, and chicken grease. I'm gonna head out to the gym. I'll probably hit y'all up later, probably, I don't know, like 8:30 or something. We'll go over no, I'm sorry. I'm saying the wrong thing. My apologies. I will probably come through later, 8:30 for the sector review. I'm not doing the normal Sunday look at plays things yet because the market is closed on Monday. So I'm going to push that to Monday. It's kind of pointless to do it on Sunday. In the meantime, yeah, put y'all tickets together. If y'all got any tickets you want to look at, get a different perspective for that Monday, let me know. And then, like I said, on Sunday, I'll do the sector review and I'll put out that link later on tonight when I'm going live with it. All right. No problem, Ali. Peace, Cass. Oh, Cass, don't forget to DM me now. All right, talk soon.